Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for the Mizuho Americas Monthly Energy Report is Bob Yawger. He is a Senior Energy Analyst over at Mizuho Americas. Thank you very much, as always, for joining us at MarketSite. And a lot has changed since we spoke in April, and oil prices are hovering at three-year highs. Is this attributable only to the Iran nuclear deal?
The vast majority of the movement to the upside is because of the Iran nuclear deal, the walk away by President Trump. However, demand is pretty good too. The gasoline demand and heating oil demand in particular. So demand for products here in the United States is also very strong. It's very odd at this time of year for demand for heating oil to be elevated, but it is the case. We export a considerable amount of product now, and that has ramped up our demand for product.
All right, so with us withdrawing from the Iran nuclear deal, how do you expect that to impact the global oil markets?
Well, if it goes through, there's still negotiations to stay in the deal with the Europeans, the Chinese, and the Russians, basically. That could ultimately end up being this downside pressure. However, if President Trump sticks to his word, puts through the sanctions, and anybody that does business with Iran is on the sanctions list, it would ultimately take about 500,000 barrels off the market, in my opinion. And that would be on top of whatever barrels are lost in Venezuela, which has also become somewhat of a basket case as of late, with basically production there sliding by about 50,000 barrels a week. And that's obviously big numbers.
But wouldn't the U.S. or someone else jump in to pick up that production? I'm sure they have no problem continuing to turn the spigot on. Is the first part of the question. The second part of that is, how much higher can prices go at this point, and how's that going to impact prices at the pump?
Well, it's an interesting, actually it was 50,000 barrels a month for the Venezuelan production. But yes, you would think that we're trying our best to jump in there. The shale producer in the United States is trying their best to step into the space. Domestic production was up 80,000 in last week's EIA report. The problem is most of that production is in the Permian Basin in West Texas, and production there is going higher, and it can go much higher. However, the pipe that's needed, the pipelines, they're not adequate. We don't have enough of them there. They'll be there in several months, but as of right this second, they're not. And as a result of that, crude oil in West Texas is trading at a big discount to WTI for starters. That's the domestic grade that is benchmarked for crude oil. And then also to the international benchmark, which is $5 more expensive, $6 more expensive than U.S. crude oil. There's so much crude there in West Texas that they're giving it away for a $12 discount, and still people can't get it out of the area. The pipes are fully subscribed. You can't jam any more barrels into the pipelines. So it's a situation that even if you could increase production in our most important area, production space in the United States, you couldn't get it out of the area.
So this is a question that we get a lot from the audience. When we look at that $71 per barrel figure, three-year highs, are you looking at Brent or is that WTI? Which one do you look at?
Yes, I think that the way it really is, Americans look at the Brent, at the WTI number, and everybody else looks at Brent. So unfortunately, it is a bit confusing. And traders, they do trade the spread between them very actively. It's a big market on that spread. But I mean, I grew up on the trading floor at NYMEX, so I always look at WTI.
Right.
It's at about $6 discount to Brent. The reason for that is that Brent is much more sensitive to the international whims of geopolitics to a certain degree, which right now are bid because of the Iran situation and the OPEC situation, which has taken OPEC folks have taken X amount of barrels off the market, and also the fact that the United States we are at record production numbers, so that tends to put pressure on the U.S. price. Now, at the end of the day, the U.S. barrel is of much better quality than the Brent barrel. You can get more gasoline out of a U.S. barrel than you can out of a Brent barrel.
So do you think we hear that $71 figure because it's going to make headlines more than, okay, looking at the discount
the news
number?
will strategically pick and choose.
Right, just like when we look at the Dow, when the market's up 200 points, 300 points, when on a percentage basis.
Same concept.
Got it, okay. Yes. And then, so how much, regardless of which one you look at, how much higher do you think it could go from here? And that's going to eventually trickle down to prices at the pump, because I noticed where we are in New Jersey, we're looking at like $3 a gallon now. It's starting to tick back up.
Believe it or not, gasoline is actually, and distillate have been stronger than crude oil as of late. So they're actually ripping. I'm going to make it nice and easy for you.
Right.
Brent, $80, which makes WTI, which is $5 discount, $75.
Right.
Two nice whole numbers there for you. I think those are ultimately the targets that we will get to. The market will be extended at that point. somebody along the lines of Russia, perhaps Saudi Arabia, will step in the space and say, all right, we're going to unleash our production here a little bit. We're going to put extra barrels on the market. We've accomplished our objective of getting the prices bid. I think that would be the point where the Russians, in my opinion, right now would love to add production to the international flow. Saudi Arabia is still probably trying to keep prices bid, so $80 is good for them too. They may not really add barrels because they wouldn't mind seeing 90 because of the IPO that's coming. Things along these lines. But I think people like the Russians would probably be of the mind that they'd like to add barrels. It behooves them to do so. The United States will add as many barrels as we can get out of the country. Exports are always going higher, so those pipes will start to come online too. So we'll be able to get more barrels to market.
All right. Well, thank you very much for joining us at MarketSite. And traders, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.